Let's talk about this miss when it comes to second quarter operating income, the outlook there. Is that a result of tariffs in your view?
It has to be, because when I think about the operating margin that they just posted with AWS, incredible, near 40%, the downside that we're seeing going into 2Q, I can't think of anything else that could be driving that than higher costs that they'll have to absorb due to the tariffs.
Are you surprised that, like, we kind of, went through that press release? There's really nothing on tariffs. There's like that disclosure that kind of dumps everything at the very bottom of the page. Not surprising to see that they didn't really address it in the release. And I guess it's all going to come out on the call.
Yeah, I think there's going to be a lot of questions about tariffs. Keep in mind that, Amazon is directly exposed on the 1P side. So roughly 40% of its business is where they do have to deal with tariffs. The other 60%, that's 3P, the sellers have to deal with them. But Amazon helps you set the price on its platform to make it competitive. So there's just a lot of back and forth that's going on. And with some suppliers, they are working one-on-one to see where they can help offset the price increases. But the biggest delta between 1Q and 2Q is tariffs. So the guidance that we see here has to be a result of that wide net that they've casted.
You mentioned the P's.
What are you
Translate for us.
Sure, third party and first party. So first party is when Amazon owns the goods. So basically they take on the cost. And they directly source it from the supplier. Third party is if you and I go onto Amazon and we start selling stuff.
What's the breakdown in terms of actual goods that are sold third party versus first party?
Sure. Third party we estimate is about 65%, and first party is about 35 to 40%. So
okay.
It's 64.
And is there more, like third party is more from China, or do we not know, than first party?
Well, Amazon doesn't tell you how much they get from China, but just by looking at what's on their platforms and third-party data, irrespective third-party or first-party, it's estimated that over 70% of what's sold on the Amazon.com platform is from China. So it's a large, large, large piece of their marketplace.
And just to remind everybody, I mean, you study e-commerce, athleisure, off-price retail. This is your world. This stuff is made overseas. Like very little of it is made here in the US.
Very little. I mean, food is the only thing we may procure locally that Amazon sells, really. Everything else, the bulk of what you buy in retail in the US is made outside of the US. It doesn't matter who you are.
What?
I don't know.
Okay. I'll let him have a moment. What's interesting, Poonam, we kind of just laugh that normally when we're talking Amazon, we're all over Amazon Web Services. And it's like, oh, yeah, that retail business. So what an interesting kind of report to go through and what we're focusing on. I do want to point out, though, that AWS reported first quarter sales gained 17% to $29.3 billion, in line with analyst estimates. It was the unit's slowest growth in a year. So it does feel like, I don't know, like, what do we get out of that?
I think it's okay. I mean, we're going to see businesses pull forward spend, pull back on spend. There's still a lot of momentum here on the AWS side. And really, while the sales were just in line, the margin was incredible. 39% operating margins, 39.5% roughly. That's huge. Consensus is looking for about 35%. So we do think, this business will ebb and flow. And you'll have high margins, you'll have low margins depending on where they invest. But the long-term potential of AWS is still pretty sizable, and there's a long runway here.